This panel is Curious and Conscious Investing. We did have Sean Peasgood earlier, and he did a lovely chat around due diligence practices and bridging the communication gap. We're going to dive right back into that with some ladies who are very heavily involved in this side of the space and invest in public and private markets. So I'd like to welcome Alyssa Berry, Principal and Co-founder of IR Labs, Cindy Broad, VP of Business Development with BTV, and Carolyn Schaefer, Okanagan Women co-founder and GP. Thank you, ladies. I'd like to start off and have these ladies introduce themselves and just talk about what their business practice is. Alyssa, why don't we start off with you?
Good afternoon, everyone. Thank you very much for being here and for spending time with us. Anna, Anil, and Melissa, and the entire CSE team, thank you very much for pulling this together. My name is Alyssa Berry. I run an investor relations advisory firm that is across Canada. We have team members from coast to coast. I tend to choose to work with clients that have purpose, better for you, better for the planet. My amazing business partner, Caroline Sawamoto, is here as well, and a couple of our companies that we support are also here, and it's a really great honor to be able to have a platform and an opportunity to meet new investors and be able to share some of our client stories today. Thank you.
Alyssa, I think you really redefine a little bit what an IR firm does. You guys have really kind of come to market and redesigned it, so to speak.
Yeah, it's you have to do things different in this market and getting visibility, getting the story out there. I wanted to be a journalist before I got in the capital markets, and so that having that storytelling lens, I think, helps.
Absolutely. Carolyn?
Hello, everyone. My background is law. I guess I come from law, which makes me more comfortable being on this panel to talk about due diligence. But I then became involved with angel investing after a company that I was involved with exited. And I've been a part of the Okanagan Angel Summit. I was a director of that in the Okanagan Angel Summit, and both the Okanagan women are both set up similarly in that they're micro funds where individuals will invest $5,000 and then contribute towards a larger pool of $150,000 and either make 2 or 3 or 4 investments or make one large investment. So my background is very much in the private capital and at the angel space. And then I've been fortunate enough to be a part of Accelerate Okanagan for a number of years through the Angel Summit. And this might be a bit of a spoiler because I know this is coming out in the next 2 days, but I am going to be taking over for Bree too as the interim CEO over the next year.
Breaking news.
Yes, but you will be seeing the
insider information.
Next few days.
Carolyn, maybe to the local community, this is a silly question, but the Okanagan Valley has very much built out a large angel investor network. Can you just describe what is an angel investor? What sets them apart?
Because an angel investor falls into, I guess, I don't know which way you want to describe it, but either the exempt, they fall into that exempt category, or they fall into the venture capital category. But they're at the first stage of venture capital. And when people ask, why would you become an angel investor? In my mind, you have to want to work with the founders directly. If you didn't want to work with the founders directly or support companies at a very early stage where there's still a lot more uncertainty on the direction they're going, you should just be at the next stage where it's more venture capital, where there's larger checks going in and there's a lot more certainty. But we find most angel investors are either themselves somehow supported by an angel investor, very invested in the founder community, or want to support because they see there's just an alignment.
Right, so you become a bit of a partner as an investor as well.
You can. I mean, there's times where you may not want to be involved, and as a founder, you don't want your angel investors too involved, but you definitely want them to be there as like side support services.
Right, and future rounds of capital needs as well.
Yeah, because they can hopefully make some introductions to those next stages of capital.
Right, absolutely. Cindy?
Hello. Again, I echo the sentiments of thank you for hosting this fabulous event. There's such great companies outside, too, that are very investable opportunities. My name's Cindy Broad, and I'm the VP of Business Development for Business Television, BTV. And what we do is work with public companies to get their message out to investors and tell their stories in unique ways. We partner with broadcasters in Canada and the US. So BNN in Canada obviously is a great resource for business news. And then CNBC and Bloomberg and Fox Business News in the US as well. And help them tell their stories and reach investors and help investors discover companies to invest in.
Wonderful. Thank you, Cindy. I think the kind of basis of this conversation is really around the fact that as we are developing due diligence practices, and we're going to talk next about what some of those are and what are things that you want to look at when you're looking at a company, is also, it's happened very quickly. I got my broker's license 20 years ago, and access to information has dramatically shifted. You would call your broker to get information. You could go to a wonderful website called CEDAR, which was probably built in the 60s, to retrieve press release information. Things had to go across wire, but websites were very archaic and very expensive to manage and not updated with regular information. As well, just investor presentations, you'd have to fly to a conference to be able to participate. We're lucky enough in forums like these now where we can videotape it and we can have it online for people to see all over the place. But the flow of information has dramatically shifted, which is an amazing thing, but it obviously also has some downsides because what information do we trust? And what is important information to listen to and what TikTok videos not to listen to, perhaps. So first of all, I'd just like to start off, Alyssa, maybe we'll start with you. What are some due diligence practices when you're looking at a company that are important for an investor?
Sure. I'm going to position it in a way to tell you a little bit of a story in terms of how I got to where I am today that had to do with due diligence. So I took a pivot in my career of being in-house investor relations for about 12 plus years, and then I became a shareholder activist. So I had the opportunity to underwrite companies, small caps to mega cap companies on various exchanges around the world, looking at essentially being a value investor. So finding companies that are trading at deep discounts and trying to figure out what are they actually worth and how can we bridge that value gap. And that really opened my eyes to a lot of those check boxes that I'm sure many of you have in terms of a really solid management team and what does the capital structure look like amongst, there's probably 20 things plus depending on who you are and what's important to you. But the really big thing for me when I'm looking at my own personal investments and also supporting my companies is shareholder engagement and making yourself accessible. I believe it's so important to build that relationship with the CEO, and maybe you don't always have access directly to the CEO, but being able to engage in the materials that are being provided. Is someone responding from the company to be able to give me the answers to the information that I'm looking for? I think it's always worth taking that extra step of doing your own homework, but then having an opportunity to meet CEO, the C-suite, maybe other members of management as well, to get to know them. And I think that really gives you a lot of comfort. It builds really great relationships between issuers and investors. So that's not all the things I look for, but something that I wanted to share and really encourage all of you as you're looking at different opportunities is reach out to the companies directly, reach out to investor relations and have conversation.
Okay, I think that's really important because I think people are afraid to do that. You can pick up the phone and you can call the CEO or the investor relations person and ask them about their company. This is what they do for a living. This is, they actually really like doing it. I think some of them do it in their sleep. So if you're interested in a company, don't be afraid to contact them and have that conversation directly, for sure. Thank you, Alyssa. What about you, Carolyn? What are due diligence practices that are important to you?
I think just coming off that, because with angel investing, you are only ever usually dealing with the founder, so it's a very different practice because you start your conversations with the founder. And I find that you can actually, because there is so much information available, you can quickly become overwhelmed or overwhelm and waste both your time and that of the founder. So we find that it's best if you're very clear on your reasons for investing. And I mean, at angel investing level, you talk about your own investment thesis, but some of it is actually making sure that you have hurdles in place so that you're only asking for, like, if you have a very specific, like if you're looking for like an impact investment or you want like a founder equity and you want like the founder to be, X% female owned, that you put in those hurdles in place to make sure that those metrics are in place before you continue to have conversations, and continue to have hurdles like that to make sure that you're not wasting the time of yourself and the investors and the founders that you're working with. Because once you do, like, it almost becomes, it's such a small acquisition, but it almost, like a subscription of shares or getting a small angel investment is like an acquisition of shares. So you can ask for like a wide array of information, but it's good to make sure that you're just very focused on what you're looking for to start with.
Wonderful, thank you. Cindy?
There's lots of resources out there, like you were saying, Anna, to sort of do your due diligence. Getting to know the management team, I 100% agree, is so valuable. You want to make sure that the management team aligns with what you're looking to invest in, and that the company is falling in line with that as well. There's libraries. We have a huge CEO clip library where you can go online and watch videos of management, 60-second clips, and they're giving you their 60-second elevator pitch, basically, on what who the company is and what they do. You can get so much information around that. And you want a CEO, I think, that is able to tell a very succinct message. So that's really important as well. It shows that they are really in tune with what they're delivering and who they are and what they stand for as a company as well. So.
Wonderful, thank you. Alyssa, I'm going to ask you this. There's a few things that we kind of talked about. So management obviously is very important. Cap table. Can you explain what the cap table is, where you find it, and what you should be looking for in it?
Okay. Every company that goes public or is publicly traded is going to have to disclose to their investors what their financial situation looks like and where their shares are allocated. So the investor deck is a really great place to start, and probably the best place that is least intimidating. If you get into MD&As and financial statements and others disclosure, it can be a little bit tricky and maybe sometimes overwhelming if you're not familiar with navigating those materials. But definitely every investor deck or investor website should have a breakdown, and it will show you how many shares are out there to be traded, how many stock options and other things such as warrants and other preferred types of securities that might exist. It's just really good to understand that if you're investing in something that maybe doesn't, maybe they're not capitalized. Maybe they don't have enough runway to actually get to commercialization. They've got a really great vision, but how are they going to get there? Those are important things to look at. And also incentives. How much does management own? Is there skin in the game?
Options, warrants.
Yes, absolutely.
Yeah, wonderful. Carolyn, when you're looking at a private company, how do you deal with valuation? Because obviously valuation in the capital markets is defined a little bit by the open auction, but how do you deal with that on the private side?
Valuation is a very tricky topic at the private stage, especially at the early stage, because I think the metrics are just not there to be looking at revenue often for valuation. So it's one of those things where we feel that angels really need to make sure that they understand the industry that they're investing into, because the valuation will change depending on the sector that they're working within. And then there are some very basic guidelines that angels can learn as to what a valuation should start at, and then what it should look like once the traction's hit a certain level, or if you're looking at different metrics, like you're looking at impact, what those metrics fall within with valuation. But again, it's so sector by sector specific that you should really just be familiarizing with the industry you're investing in.
And I'm not sure if you're a CFA or not, but do you have guidance when you're looking at these valuations? You've just done it for long enough.
Yeah, it's unfortunately it's very it's not there isn't.
Call Carolyn is what she's saying.
No, it's because they always say that there's a saying, and I'm just thinking back at the top of my head, but it's very much more of an art than a science.
Yeah.
And because it is so early stage, it is basically there's factors as who are the founders are, what's their reputation, because sometimes that's a factor as much as the team they've built. What's their trajectory look like? How is raising? Because if VCs are very interested in that. space, then you know that they're more likely to be funded in 2 or 3 years. So that's also a factor. So there's so many different soft factors that are hard to.
Especially in a small community, because you guys have such an amazing tech community. There are groups that even I've gotten to know where you've seen them do 3 or 4 projects. They might get a premium on their next project just because the way that they're able to execute and raise capital. Cindy, you mentioned something that I thought was interesting to kind of, first of all, explain and then how to decipher it. But what is earned versus paid?
That's a great question. And I think that both have their place in the way that companies market themselves to their potential investors or bring on net new shareholders. I think it was Sophic Capital made the comment earlier today that all companies start small and grow, right? So you might have the best story in the world, and if nobody can find it because they don't know who your company is or anything about your story, you're not going to grow. You need eyeballs on your story, basically. And paid media is a very valuable piece of the marketing mix to be able to share your story with millions of investors, which obviously makes for a healthy company, right? So
you're saying it's not necessarily a bad thing?
It's definitely not necessarily a bad thing. I think it actually shows management's commitment and ability to strategically plan getting the most out of catalysts and milestones as they sort of cross certain thresholds in their business. So it's also a really great way to go back and gauge, have they met their milestones, or have they delivered on what they've said they're going to. You can go back and watch video clips or watch different pieces that might have been a paid content piece, and see if they've met those. It's deploying that messaging all along the way at the right time as well is really important. It also helps companies bridge the gap into earned media because now their stories out there, talking about quality of media as well. Basically, any pieces that are aired on broadcast are not only have to be compliant. Obviously, these are publicly traded companies. They have compliance that needs to be met. But they're also vetted again for national broadcast, right? So these are high-quality pieces, compliant pieces that you're going to be able to get the information that you're looking for out of, and that's really important as well. That's kind of the benefit of it.
So one thing I want to ask all three of you, because I feel like this is something we all need to approach as we're all investors in the space because it's new, is investing in a stock and social media. So we're seeing stuff come onto social media. Most companies now have an Instagram page, and they have a Facebook page, and they have maybe a TikTok page. They have a channel on YouTube. I almost mentioned our YouTube channel, CSC TV. Check it out, please. So how do you approach social media from the IR perspective? How do you approach it?
I love this topic. So it is really hard for our issuers, our clients, to get visibility. A lot of the companies that you're invested in today, getting a desk presentation, being able to get analyst coverage when you're new to the market and you're a small cap, nano cap, micro cap, it is becoming even more difficult. Our team's talking to investment advisors, brokers, portfolio managers all day long, and I would say 75% of the time they're not even in the offices. Not that that really impacts the conversation, but it's just becoming more difficult. So social media is really important, but my philosophy and how we operate with our clients is we want to put out quality content that is authentic and factual. We leverage LinkedIn like crazy. I actively, on behalf of our business and my clients, we're in LinkedIn all the time. I feel like I'm at a conference every single day, and it's working out really nicely for us. But I'm going to use this analogy. So you're wearing a really nice jacket, and so you go on TikTok, and someone says you got to buy this jacket. It's the best jacket you'll ever buy, and they've been paid $500 or whatever it is to be able to say that. So you get the jacket home and you try it on once and it rips and it falls apart and it's a piece of junk. So, the same thing, I'm using that analogy because it's the end of the day and I'm trying to give us something here. But, it's the same thing looking at companies. If someone has told you that the company is great and they're giving you a promo piece and then you invest in it, and then you go and do your research and the cap table is crummy and the management team has bad track records and they haven't performed.
So it's like the gateway drug, social media.
It's a blessing and a curse.
It's a blessing and a curse. So don't use it as your source of information, but it could be what you use to start your investigatory process with the company. Carolyn, what about you? Do you go through that with the private companies? Is there any element of your due diligence where you pay attention to social media?
It would, again, it depends really very much on the sector, but I don't think social media plays a large role in angel investing unless you're dealing with consumer product goods, which isn't something that we invest in quite a bit, but there are funds that are specifically investing in consumer product goods. But I think when you are looking at social media, it's only when you're encountering due diligence, and then you're looking at making sure that it's not just users, you're looking at engagements. And one of the benefits of being in these micro venture funds is typically there is someone in the room who is like a digital marketing specialist who can be these metrics are industry standard or not. And it's interesting, and we actually ask when we talk to founders now if they know their own industry metrics to make sure that they put them as baselines for angels, because angels just can't know all the different metrics that they should be meeting for social media.
Right. Cindy?
Well, I think you want numerous voices telling your story. So I think from an investor standpoint, that's how you can kind of walk through that, right? You want credible voices telling your story, numerous. You don't want, back to the paid part, you don't want one voice on your story. You want numerous voices on your story. And, we spend so much time looking into things like, what we put in our body or what label we're going to buy or all those things. And we're doing so much due diligence on things like that. This is your hard-earned investment dollars, right? So you want to go through and sure, take other people's opinions and read them. And I believe that companies on social media should be telling their own stories, not having somebody telling it for them, because that's where it gets really a slippery slope. They need to be in control of that messaging for sure. There are compliance issues around that. I think digest lots of content and spend time doing it, and then you can make better investment decisions that way for sure.
Absolutely. I think there's been a bit of a movement, from my understanding on TikTok. There's been a movement. There's groups that are not industry professionals by any means, but have the ability to make huge movements. So I wonder how that will play out, especially as the next generation of investor comes to the market and they're figuring it out for themselves. I think one thing that's really important for investing in general, whether it's private or public, there's professionals out there and they are mandated by self-regulatory bodies and by professional designations, and definitely utilize them. Pick up the phone and make a call to help you go through that process. Before we wrap up, does anyone have any questions? We answered everything.
Okay, so this is a panel of women, and this is a seminar on responsible investment, and a lot of buzz terms we've been hearing today is ESG. So there was a study back in 2003. Let me just pull this up. I get the mic.
This is someone who does their research really well.
And I brought it with me. So in 2003, there was a study that from Forbes, 1,000 firms found statistically significant positive relations between the presence of women or minorities on the board and firm value. Since we're all women that vote with our dollars and share our stories, do you, when you share these stories or vote with your daughters, or vote with your dollars, pardon me, hold the men to account on what's on the board, who's on the board?
I could actually probably speak to that briefly. I sit on a forum with the BCSC, and that's something that's being discussed from a regulatory level, is the question around mandating diversity on boards. So that discussion is definitely happening behind the curtain. I think everyone appreciates that there is, at a certain size, to have those extra mandates on a small company who's doing their best to kind of get their feet off the ground. And we have to remember that diversity needing diversity comes in all shapes and forms. So an all-female board is not diverse either, right? So there's definitely a lot of those conversations that are happening from a regulatory standpoint. But do you guys notice that there's diversity on boards that when you deal with companies?
I think when we look at particularly the venture exchanges, we see companies that are a little bit younger in their journey. They have great aspirations of uplisting, or maybe they're going to get taken out or move to a different exchange. This is I know this is what they're aspiring for, but there needs to be more women on the cap table. So what I'm getting at here is a lot of men are building the deals. They're bringing them to market, taking them public. The more women who can actually get involved, early angel investing, founders rounds, or early series prior to going public, I think that's when we're going to start seeing a shift. And we're having a lot of those active conversations with a lot of our private clients today.
Well, and Carolyn, you can speak to that since you guys co-founded Okanagan Women, which is an angel investor group, and it's only women. Is that right?
Mm-hmm. That's
Yeah.
correct.
So we're seeing the shift.
No, and I agree. I mean, angels don't have boards at that level, so that would be typically what you're talking about. So we see it very differently, but we are investing only in female founders or with companies with female founders on the cap table, and we do try and make sure that there is a certain percentage and that they're involved in the management of the team. But the metrics for angel investing show that if there are women like founders or like women in the management team, that the returns are better, and that proves out that that statistic. So I think that is something that we try to make sure is emphasized at the angel investing level, to be looking for that when you're an angel investor, because it is something that will also help you return.
Wonderful, thank you. I think we're going to have to wrap up this panel. We could probably talk much longer, but we're going to wrap it up and move on to another panel that is being put on by Accelerate Okanagan with some local companies, so I'm very excited about that. Ladies, thank you so much for your insights. They will be sticking around, so go and grab them later if you have any questions. Thank you.